Last week, I showed you this chart. And we talked about this chart. We talked about the SPY and that we had that big run up to 600. We hit 600, target acquired. But I also said that because of the election that we saw potentially a pause, but it did not mean that the bull run was over. We could see a pause, but we could see a bull run over. And I made a case to go to 620 by year's end. Let me go into details why I like the S&P going to 620 here by year's end. Take a look at this. I took the money calendar and I went specifically in and looked at the last 20 years of data on SPY, which is the S&P 500 depository receipts. Now, you can see this 20 years of data. They go from 2004 to 2023. That's 20 years of data. In those 20 years, I see 24 days before Christmas that we have a lot of winners and we have 3 losers. That's 85% of the time in the last 20 years. The stock market, the S&P 500, has gone higher between basically now and Christmas Day. 3 years that it went against us, 2015, 2018, and 2022. However, you see these big, long areas of green? These years are election years. And going back to 2004, 2008, 2012, 2016, and 2020, all of those years, we saw higher moves in the month of December. Here we are, the beginning of December of an election year. And while I can't guarantee this is going to happen, I love this pattern. So what does this tell us? This tells us that we have a new base case for the S&P, that we believe that we will see an extension of about 5%, putting us close to that area of 620 as we head into the end of the year. But the question remains, now we could take a look at the S&P and go ahead and buy the S&P, or if you're an option trader, you could look at buying call options or call spreads on the S&P, looking at that 620 area by the end of the year. But what about individual stocks, right? What about those stocks that could stand to go higher? Because remember, the S&P is in a basket of 500 stocks. And honestly, there is a handful of these stocks that are moving the S&P, and there's a lot of stocks that are fighting against it. That's what an index is. So for individual stocks, we go into the money calendar. And the money calendar, as you know, is a way of looking at stocks in a minimum 10-year pattern that have at least 90% winners over the last 10 years of these roughly 20 to 40-day patterns. Now, what I do is I look at the overall calendar, and I see if it's mostly green, it tells me that the overall calendar wants to move, or the overall stock market wants to move higher. And if it's red, the overall stock market wants to move lower. This was Thanksgiving. This was the calendar you're seeing right now was November. And what we do is we look inside those opportunities each particular day. Now, we're looking for things like trade duration. We're looking for things like, when is this trade likely to end? What is the accuracy? Because again, minimum is 90%, but sometimes we see higher. We look at average returns because I want to make sure what I am getting into has a return that beats the S&P 500. And then I'm looking at something called power meter, which tells me what that particular stock is doing as we get closer and closer to the pattern of today. Now, last month, we highlighted Isaac Corp, symbol FICO. And I showed you this chart. This is the exact chart we showed you this time last year. And our projection on this, with it being below 2,000, was 2,400. That was a 20% move by mid-January. So we talked about that. We talked about buying the stock. We talked about buying options. We talked about the fact that whether you bought stock or whether you bought calls on this, it was going to be expensive. This is a near $2,000 stock. Now, fast forward, and look what happened. After the election, this stock went from 1,980 all the way up to 2,400 inside of about 2 weeks. By mid-November, we hit the target. That target of 2,400 was reached. Thank you, money calendar. May I have another? All right. That is the the thank you and the question that I posed to Money Counter. Thank you, sir. May I have another? All right. So, yes, you may. Let's take a look and see what's popping up for today. So, this is December 2024. And what I did here is I'm sharing with you not only the monthly calendar, but I want to show you how we get to these numbers you're seeing here or what we're seeing on the screen. What I did in this case was I look at the last 10 years, 90% or better, minimum 20 to 40 days. I'm looking at equities. I don't have any filters set up yet. Now, what that means is I'm looking at all optionable stocks out there to see if anything meets the money calendar. Now, we don't look at all 4,000 optionables. We look at the top 10% of those. So about 400 stocks and ETFs, right? Making sure I have a positive power meter. And then, bang, I do all the work. I look at everything from accuracy, percentage return, power meter, etc. And this one came up and it had multiple trades right around today's date. So here we are looking at Ciena. Ciena Corporation, CIEN, a 30-day trade on this one, which, by the way, takes you out to about mid-January. When you take the weekends out and you look at just the trading days, 30 trading days gets you to mid-January. Well, how has it performed in the last 10 years? You got one loser out here in 2015. Every other year was a winner. Most of these are all double digits. There was 2017 where it only returned 4.78%. Last year, 9.29%. But looking at the power meter, looking at that regression line, that puts that out there somewhere. It looks like it's somewhere around 17, 18%. I'm going to back it off a bit and say, well, what about 15%? That's a fair move, looking at all of this data we see here. So we take a look at the stock price and where it is today, tack on about 15%. That puts our price projection up here around 80 by mid-January 2025. So there is the money calendar trade that I'm looking at for today. Money calendar for Ciena. Price projection 80. Time frame mid-January. So what do? The stock, you could buy the stock immediately with a target of 80 if you like this pattern. And that's for you to decide. And then the second thing you need to decide is if you really do like the pattern, maybe instead of the stock, maybe you put an option trade together with a target of 80 on it. So you look at the 70 calls, for instance, and you say, what are the 70 calls in January going to be worth if we get to 80? And if they're worth more, maybe a lot more, then maybe the calls make sense. Or if the calls are expensive, perhaps a call spread is in order for you. But we've spotted the opportunity. All right. This is just one, by the way, of several opportunities that are popping up for the month of December. But I want to show you what I'm looking at for today. Number 2 would be to create the appropriate trade. Maybe it's an alternative risk trade other than simply buying the stock. And then the third is obviously once you narrow down, you then place that order and manage that trade from start to finish.